Welcome back, everyone. Today, we're taking a deep dive into something a little different.
Different how?
Well, we're all about serious Forex trading strategies and market analysis here, right?
Right.
But even the best of us, even the most seasoned traders, yeah, we mess up sometimes.
Oh, yeah, we've all been there.
And today, we're going to laugh about it. We're going to explore
Yeah.
the hilarious, the cringeworthy, and yeah, maybe even the slightly embarrassing side of trading. Those moments where we hit the wrong button, misread a chart, or let our emotions get the best of us. Because let's be honest, those oops moments, they happen to everyone.
Absolutely. I've got a few stories myself, but let's stick to the ones from the articles you sent for this deep dive.
Perfect. So buckle up, everyone. We're about to embark on a journey into the lighter side of trading, a world of fat finger errors, caffeine-fueled misinterpretations, and those impulsive decisions that leave us wondering, what was I thinking? It's going to be fun, informative, and, hey, maybe even a little therapeutic.
I agree. Everyone makes mistakes, and sometimes it helps to laugh about them. Plus, there's a lot we can learn from these mishaps.
You're exactly right, because by understanding these mistakes, we can hopefully avoid making them ourselves, right? So, shall we start with the classic fat finger error?
Oh, the dreaded fat finger. I think every trader has experienced this at least once.
You know, I was reading an article the other day about a trader who meant to buy 100 shares of a stock,
Okay, 100 shares, yeah.
but instead, they accidentally entered 1,000, just one extra zero.
Ooh, ouch. That could be painful.
It was. And it just highlights how a tiny slip of the finger can have a massive impact on your portfolio. But it makes you think, what leads to these mistakes? Is it just carelessness, or is there something more psychological at play?
Well, there's definitely a psychological component, especially when you consider the fast-paced nature of Forex trading. You know, you're constantly under pressure to make quick decisions.
No.
And then there's the fear of missing out, the FOMO, as they call it. You see the market moving, everyone else seems to be making money, and you don't want to be left behind.
Right.
So you rush into a trade without thinking it through, without even double-checking your order.
It's like that impulse buy at the checkout counter. You don't really need it, but it's right there, and you just grab it.
Exactly. And in trading, those impulse decisions can be very costly. It's crucial to have a trading plan, a strategy that you stick to no matter what.
And that brings us to another point raised in the articles, the importance of sticking to your plan. Because even if you have a solid strategy, it's easy to get caught up in the moment, right?
Oh, absolutely. Emotions can take over, fear, greed, excitement, you name it. And suddenly you're deviating from your plan, chasing losses, or taking on more risk than you initially intended.
And that rarely ends well, does it?
No, it usually doesn't. And, speaking of things that don't end well, let's talk about misreading charts.
Oh, the blurry-eyed blunders.
Haha, yes. It's funny until it happens to you. Forex trading requires us to spend hours staring at charts, analyzing patterns, and looking for signals, but fatigue can set in. And sometimes we might overindulge in coffee or energy drinks, thinking it will keep us sharp.
But too much caffeine can make those candlestick patterns start to look like a Picasso painting, right?
Exactly. And suddenly you're seeing trends where there are none, entering trades based on blurry interpretations, and your risk management goes right out the window.
It's a recipe for disaster. So it seems like the common thread here is that these mistakes, these mishaps, they often stem from very human factors, whether it's a momentary lapse in concentration, an impulsive decision fueled by emotion, or simply being tired and not thinking clearly.
You got it. And that's why it's so important to acknowledge these human elements in trading. We're not robots. We have emotions, we get tired, and we make mistakes. The key is to learn from these mistakes and develop strategies to minimize their impact.
Absolutely. It's about having the self-awareness to recognize our weaknesses and to implement safeguards to protect ourselves, like setting order limits, taking breaks, and sticking to a well-defined trading plan.
All great points. And remember, even the best traders make mistakes. It's part of the learning process.
So true. So to wrap up our deep dive into trading mishaps, I want to leave you with a question. What's your most memorable trading blunder, real or fictional? Share your story, have a laugh, and let's learn from each other's experiences. Because at the end of the day, trading is a journey, and sometimes those wrong turns lead to the most valuable lessons. Thanks for joining us.
Thanks for having me.
Until next time, happy trading, everyone. And try not to hit the wrong button.
Uh-huh.